Welcome. Contrary to expectations, the U.S. economy saw an acceleration in growth during the third quarter. This is a clear indication of the strength of domestic demand and the continued momentum of spending and consumption. This development could reshuffle the cards in the global markets. So let's see how the markets reacted today to this data. Let's start with gold futures prices, which ended the trading session above $4,500. We are, of course, talking about yesterday's session, for the first time in the history of gold prices as silver continued. Its gains also reaching new record levels. This comes amid growing market expectations that the Federal Reserve will cut interest rates in America next year. And in light of the accelerating growth of the U.S. economy, gold is now almost stable, but silver is up by about 1.5 percentage points. Now, let's take a look at the dollar, which is heading for its worst annual performance in more than 20 years. This comes as investors bet that the U.S. central bank will have room to continue cutting interest rates, even as some other central banks around the world move to raise interest rates, such as the Central Bank of Japan, for example, which recently raised its rates. And speaking of Japan, we now turn to the Japanese indices, which turned lower at the end of today's trading, coinciding with a rise in long-term Japanese bond yields to record levels amid growing concerns about the government's stimulus package. And to conclude our tour of the global markets, let's look at oil prices, which we see are on the rise as the U.S. economy's growth accelerated in the third quarter. At its fastest pace in 2 years, this has increased expectations for higher oil demand, leading to a rise in Brent, which is now above $62 a barrel. And now for more on the performance of global markets, we are joined in the studio by Mr. Mazen Salhab, Head of Market Research at MH Market. Welcome, Mr. Mazen. So, contrary to expectations, the U.S. growth data showed an acceleration in the growth of the U.S. economy. What factors led to this acceleration, contrary to expectations?
It's clear that consumption in America, which accounts for about 70%, is still in a fairly good position. The trade tariffs did not generally have a negative impact on the course of American exports, or on American production in one way or another. Industrial production also came in better than expected. All of this contributed to keeping the gross domestic product from declining to bad levels or entering a recession. The big challenge with this growth is to maintain it, one way or another.
And this is the important point, Mazen. The factors that drove this growth, do you see them as sustainable or are they temporary? And therefore, are we talking about temporary growth?
That's right. It's linked to seasonal factors, so it could be a major challenge to stay at 4%. This growth, in fact, exceeded expectations because America won't be able to achieve such levels every quarter, for example, or in the next quarter. Taking into account that there's a decline in the labor market and also considering the major challenges related to trade tariffs, international trade, and even the United States' own internal ability to maintain this momentum. So I believe that these numbers, yes, are good, but the fourth quarter might not be the same.
All right, let's stay with the United States. The tariffs that were imposed and the trade policies, especially, of course, we're talking about the Trump era, do you think they contributed significantly to this growth?
Well, perhaps. America certainly gained tens of billions of dollars in additional revenue for the U.S. government's treasury. This was perhaps good to some extent, but did it really play a major role? I doubt it had a significant impact. Perhaps it had a non-negative role. In other words, the income that America generated mitigated the consequences of the trade tariffs in general with its trading partners. As long as the global economy didn't slide into a recession. But I believe this issue could be a double-edged sword because understanding its impact requires more time.
All right, since we're talking about an acceleration of growth in the U.S. economy, how will that be reflected in interest rates? Do you think that lowering interest rates next year has become more likely?
It is likely, but not because of the growth one way or another. It's likely because the U.S. labor market is actually showing signs of a slowdown. We saw yesterday that there was a decline in the ADP for the private sector, a decline that was also lower than expected. Also, there's a rise in unemployment rates and a decline, to some extent, in non-farm payrolls. So the US labor market is performing in a way that may not be good, and it's slowing down. It's not absolutely bad, but it is slowing down. This slowdown is what will push for an interest rate cut, but there won't be a rapid rate cut in America. The interest rate will not be cut by more than perhaps 1/4 of a percentage point in the first quarter of next year, and then we'll wait for the data. Returning to data dependency is the real standard in 2026, not predetermined monetary policies.
All right. In light of all this data and the forecasts for interest rates, we saw gold continue to rise, breaking historical levels yesterday at $4,500. But some analysts are now talking about a bubble that we will see in gold. Some believe that the movements we're currently seeing in gold are not due to it being a safe haven, but rather are speculative operations. What's your take on that?
Well, generally, the record highs are not linked to speculative operations. Speculation raises it a little, but not to 4,500. There is buying from institutional investors, from central banks. And there's a bet that the factors that drove gold higher are still in place to some extent, including the decline of the US dollar and the ability of central banks to print cheap money, and these historic record levels of cash. Today, you have a problem with credit. There's credit risk. There are risks in the credit market. This is also a key factor. Have these factors changed? They haven't. Is the rise in gold exaggerated? There's speed in gold's rise. Gold has become speculative recently, and that's what pushed it to record levels. So what does that mean? It means we might see a correction on a technical level, yes.
But not a sharp drop.
Exactly. But does it change the trajectory? We've made a 20% decline. I mean, we're talking about $1,000.
Yes.
To return to a bear market. And I think that's unlikely in the current phase, at least.
Thank you very much, Mr. Mazen Salhab, Head of Market Research at MH Markets.
Thank you. Thank you very much.
That's the end of our tour of the global markets. Now back to you, Abdulaziz.